Well, good afternoon. Sorry about the slow start there. We had some technical difficulties, but I want to introduce Rich Cordova. Rich has been a lender for quite a long time. And Rich, tell us a little bit about yourself, who you're with, and how long you've been doing this.
Oh gosh, yeah. It seems like it's been quite a while actually. I got into mortgages originally in 2008, so that kind of dates me a little bit there. But currently I've got my own brokerage. I'm an independent mortgage broker. The name of my brokerage is True Rate Home Loans. And I've worked with Dave for quite a while. I think Dave, I think we've known each other well. I won't add a date to that. I don't want to date you, but we've been working together for quite a while. So I definitely appreciate Dave's expertise as well. And he's invited me a little bit to talk as far as just kind of mortgage related things for first time home buyers. So I'll let him kind of lead it off here. But yeah, I'm just happy to be able to answer some questions.
Perfect. And Rich, before we get started, how can someone reach you if they want to reach you?
Yeah, absolutely. The best way is you can always give me a call. My number is 435-669-8003. You can look at my website, trhomeloans.com.
Perfect. Okay. And for those of you who are watching, if you haven't met me, I'm Dave Diegelman and I'm with Equity Real Estate. I've been in the business for about 23 years. And if you want to get a hold of me, my number is area code 435-703-4041. Also, at any point in time, if you have any questions during the course of this webinar, feel free to text us. I will answer as many questions as we possibly have time for at the same number, which is 435-703-4041. So, Richie, I want to address today kind of a home buyers boot camp. We could call it first time home buyers boot camp, but I've noticed that over the last few years, home buying has changed so much that really, if someone's re-entering the market and they've already owned a home or going to buy another home, this is applicable for them as well. But let's start off with just with the concept of getting mortgage ready. You're ready to buy a home. What are those steps that you need to take?
Yeah, absolutely. And you bring up an important point there. When we talk first-time home buyers, that typically just means you haven't owned a home in the last 3 years. So, even if you've owned a home in the past, that doesn't necessarily mean you don't qualify as a first-time home buyer. So, that's something important to always bring up. As far as getting ready, and there's a lot of different things we could go into and, spend quite a bit of detail in, but I'd say the biggest thing is just, like most things, is just preparing early, because there's a lot that you can kind of do to help yourself out if you start ahead of time. When we go to help you qualify for the mortgage, we're really taking like a 2 month snapshot of your financial picture. And there's a lot that we can kind of do to make sure that that's the best snapshot possible. So, I would say, talk with somebody early, figure out a plan. It doesn't necessarily mean that you're not sometimes having to wait before you buy, but you want to know, what you're waiting on and know, kind of like, hey, am I trying to get my credit score up? And I'm waiting till we have a little bit of a longer job history. Sometimes it's, hey, I just started getting overtime. How long do I need to be receiving this overtime so that, we can use that income? So obviously, everybody's financial situation is unique. And that's where, talking with somebody and kind of putting together that game plan, I would say, as long as 12 months, but,
Okay.
usually at least six months before buying a home, ideally you want to kind of start having that conversation with a lender.
Yeah, and I've certainly seen that too, and especially working with you, where, we've had clients that, I've had different individual situations that it's more advantageous for them to wait until their 2 years of work history is behind them, or their taxes come back, or, one of a million other things. That's not to say that you can't qualify and get qualified to buy a house next month, though, is it?
No, absolutely. And usually, our job here is to kind of present the options and help you, guide you on, what you're trying to accomplish. So typically what we'll do is, a lot of times it is, hey, we can get you qualified and we can get you into home right away. But, at the same time, if, it's something where you can get better loan terms or it's a better situation in any way, if you do wait a little ways, we'll definitely educate you on, hey, here's your options. That way you can kind of decide, because there's obviously an opportunity cost to waiting as well. We can talk, well, you'll get a slightly better rate if we wait potentially because, now you've got a higher credit score. But that isn't to say that you don't miss out on the home that you wanted to buy, or to say
Yeah,
that, home values don't go up. So, there's a lot of different, factors to consider. But, it is definitely about taking a look at your situation and figuring out, what makes the most sense.
perfect. And I know that we've been through this on many occasions with my clients, but what are some of the biggest mistakes that renters make when it comes to the home buying process?
Again, not to just, kind of harp on the same thing, but it's just like making sure that you spend the time to get prepared. Because again, sometimes, again, we're taking a look at a 2 month snapshot. So, if you come to me and say, hey, great news, I just found a house I love, Dave helped me find it, we're in love with it, can I get pre-approved? Absolutely. In a lot of cases, we're able to whip together a pre-approval letter, get you qualified, and get the loan closed. But at the same time, if it's where, gosh, that's, you're really tight on your ratios, or, there's some other things. If we would have had maybe 30, 60, 90 days to kind of work on those things, we can, credit score comes up quite often. Well, credit score isn't something that's like a static, that's what my credit score is. Your credit score changes month to month. We can actually even do a rapid rescore where I can take a look at your scenario and say, hey, if you paid down this bill by this amount, that'll most likely bump your score an extra 20 points. So, just even having a few weeks to work there to optimize your credit score in some cases gets you better loan terms, helps you qualify for more house. So, again, it's just kind of preparing ahead of time. I'd say that's the biggest mistake, because there's not, I'd say, one financial mistake people make. Everybody has a financial picture, and yeah, in there sometimes there's things that we have to kind of address, like, oh, they've had a bankruptcy in the past or something like that. But it's not like, oh, everybody makes this mistake. Just spend the time to make sure you're prepared, I'd say, is the biggest thing.
Yeah, I guess in my career, and this was way before I knew you, this is back in the mid 2000s. I had a client that went out and bought a car while we were in escrow, and it killed it. It killed the deal. I mean, they had to jump through so many hoops and pay a much higher interest rate. And I don't even remember all the details, but they were, let me just put it, their tire got deflated.
Yeah, absolutely. Now that's definitely something that we forewarn people with. If you're under contract and we're moving forward with a loan, absolutely we advise people, don't do anything with your credit, don't make any large purchases, don't quit jobs. And it's surprising. You don't think that, those things happen, but they do. And sometimes it's life and you can't avoid it. But, I had a situation where I was actually just meeting a client, giving him a gift. I forget which holiday it was, but we were just kind of talking, and they just kind of nonchalantly told me, well, yeah, I'm actually starting my new job next week. Ideally, don't plan a vacation around close of escrow of your new house. I know that that's a popular one, and sometimes, I don't know, maybe that's just how life works. A vacation just is in the cards, but some of those things are always kind of nice.
Yeah. Anyway, the bottom line is when you're under contract, don't go buying new cars, don't go on vacation, don't go.
Absolutely. And sometimes you have to, but make sure you communicate that if that is the case. So,
Right, exactly, exactly. Um, what's the difference between being pre-qualified and pre-approved?
Yeah, that's an important question. So I'd say the big difference is, pre-qualified is like you filled out an application, we looked at your information, and based upon that, we can approve you for the loan. Now, in a lot of cases, obviously that information is going to be, solid, and that's going to be good, and we'll be able to close the loan. However, realize, underwriters, they have a little bit different of a way to look at things. So I don't think people necessarily intend to mislead us or anything on the loan application, but sometimes like income, it can be tricky. So maybe you list, well, this is my estimate of my overtime, and, the underwriter has a different calculation on that. So a pre-approval is where we actually take a look at your documents. So now we've looked at the pay stubs, we've looked at all of your financial documents, and we've said, okay, here's the number that we've calculated for income. So a pre-approval is just a lot more of a solid approval. A
Okay.
pre-qualification, I'd say, even though it should be good, there's a likelihood a probability that it could potentially have something come up. Pre-approvals, especially with a good loan officer, should be solid unless you've changed something with your situation, bought a new vehicle, lost your job, something like that. Then that pre-approval will be, a closed loan for you.
Yeah, that makes sense. And I can just, say for the majority of people, I think 99% of the time in my career, when someone was pre-approved or I'm pre-qualified by a lender, the loan went through as promised, as planned, as intended. But I will also say that when we were in a market where there was multiple offers on every single house in 2022, taking a buyer out was kind of tough because they're putting in an offer and they're going to be against like cash buyers and other things like that. And one of the things that I found is I had a buyer that actually fell out of escrow on a property. They decided they didn't want the property after inspections, but they had already been through underwriting, and so they actually had that pre-approval, and the lender was able to communicate that on our offer, and it made the difference of not being able to be considered to getting that home. So, I don't know how often that comes up, but it happened, it happens every so often, doesn't it?
Yeah, absolutely. Well, and I would say, obviously the seller is going to appreciate, a potential buyer who's pre-approved just because, they want to make sure there's not anything that's going to come up, during escrow just because they can't get financed. And then I would say for the buyer as well, it's pretty disappointing. You spend a lot of time, you go out shopping with Dave. He helps you find the perfect home that you just absolutely love. And then, you can't close on it because of, some weird caveat with the lender. That's really discouraging for all parties involved. So
Yeah.
I always encourage somebody to be pre-approved.
Yeah.
In some situations it's pretty straightforward. I think if you need a quick on the fly, there could be a one-off where there's a pre-qualification. But I would say everybody should seek to be pre-approved, and most lenders should know that hey, a pre-approval is what they need to put together.
Yeah. Yeah. That makes sense. The other thing I wanted to just throw out there real quick is I've had buyers in the past, especially when I was a newer agent and really didn't know any better, that said, "Yeah, I've got a buyer that I'm going to use because I really shopped rates," and that to me means they looked on the internet and they found something that was too good to be true. And come 2 days before closing, we found out it was too good to be true. And so I think I only had that happen to me once. And from then on, I said, if you've got a lender you've been working with and you trust, that's fine. But I'm going to recommend lenders to you because I've had this happen before where something unravels at the end because someone was shopping on the internet for loans. Tell me about internet fraud in lending. Does that happen?
Yeah, I mean, definitely there is fraud. I would say it's probably not like I would be less concerned with somebody finding an online lender and then, discovering that that was fraudulent. and maybe more concerned with somebody just ending up with a loan officer who was just maybe not as experienced, didn't know your area. Kind of going back to the pre-qualified, pre-approved, one of the things that if you're a reputable loan officer, you really kind of stake your reputation on the fact that if you tell somebody they can buy the house, that they're going to end up being able to buy that house. Because again,
Absolutely.
it's bad for all parties involved if the transaction can't close and it's the lender's fault. So I would say that that would be the bigger concern is
Yeah.
you end up in a situation where, you're dealing with someone who threw together a pre-qualification. They were just hoping that the deal closes, something comes up, and I would say, not that they don't care, but just, you're not as important. And I would say that would be the bigger concern than just outright, it was a fraudulent mortgage company.
Yeah, I guess that's true because yeah, they weren't fraudulent in the case that I was thinking of. But yeah, I always tell people that, when I refer you to someone, they depend on my business as well as other, real estate agents, but they're gonna pull rabbits out of hats and they're gonna bend over backwards because that's how they get their business. And that relationship is fundamentally important in getting a loan through. And complications do come up in loans. It happens. You and I have been through several, and you've pulled through on every single one of them for my clients. So I thank you for that.
Yeah. Well, and I have to keep answering my phone, right? We want to make sure that you can't get ghosted by someone just because now you're in a tough situation, that they are going to work through it with you and your client. So yeah, that's I appreciate that, but yeah, absolutely,
Yeah.
that's what I would look out for.
Let's look at down payments and down payment myths. A lot of first time buyers feel like, okay, you've got to have 20% down to buy a home. That might be one thing. Or, you know, can funds be gifted? And, what's PMI and when does it go away? Talk to me about some of the down payment myths that come up.
Yeah, I mean, I would say the biggest thing with down payment myths is just everybody's fear or hesitation or whatever belief it is that would be, I can't get into a house because I don't have a down payment. Because there are a lot of different programs available. There's a lot of financing out there where you don't even necessarily need a down payment. There's housing assistance programs where they
Yep.
help with the down payment. There's FHA programs. There's VA programs. There's Utah Housing, USDA. There's a lot of different options. And one of the questions that comes up, well, which one of those is best? Well, it really depends on your financial situation. So the thing to understand is there are a lot of different options out there, and you want to talk with somebody to kind of explore what is out there. Now, I will tell you, sometimes having a small down payment, there's a little bit better of a financing option than an all out down payment assistance. 0% down. I'll also tell you, even though, there are sometimes, well, not sometimes, there are programs out there that will also assist with the closing costs. I would also tell people to typically be prepared to have some money for closing, which, realistically, anytime you're moving, that's kind of an expectation. I mean, even, if you're renting somewhere, usually you're going to need, a first month and a deposit. So, I would say save up a little bit of money, even if you're going to do a no down payment. Even if there's no loan or closing or down payment costs, there's usually going to be some moving expenses. So, it's always a good idea to start saving money if you're looking to buy a house.
Yeah. And, along with down payments, it used to be, my gosh, when this was just back a few years ago, the average cost of moving into a rental was the same cost of buying a house. Now, it's not quite that way anymore. It costs a little bit more to get into a house. But I mean, if you think about an average rental of, let's say, $2,000, by the time you do first, last, and security, you're putting down anywhere from $4,000 to $6,000
Yeah.
for that. If you as a first time buyer were to be thinking of that in terms of putting into a house, I think you're going to be a lot better off in the short run and the long run, don't you?
Oh, absolutely. I mean, the statistics are pretty, pretty clear on that. As far as when you look at people's, net worth, home ownership is one of the biggest driving forces in that. And, it's because you can't really, the fact of you own a home and yeah, we've seen these, little swings in the market, but at the end of the day, we also look at the chart and we know over a 10-year time span, the people who owned houses versus the people who rented homes, there's a big gap, and that's been all throughout time. You just continue to see that, and it's because of the value of home ownership.
Yeah, yeah. Let's talk about monthly payments and a reality check. And I've got a question that just came in. Let me just look at it. Says I'm a single guy looking to buy my first home. My monthly income doesn't quite qualify for a mortgage on a starter three-bedroom home. Could I rent out a couple of rooms and help supplement that? And would that count up front for qualifying?
Yeah, so unfortunately, you can't utilize border income for qualifying purposes. You would have to find somebody that you were gonna, buy the house with as co-signers or,
Okay.
borrowers, which that is becoming more common. I see, single guys that get, it's two, three guys, and they end up purchasing a house together. So, but yeah, just having roommates, we wouldn't be able to utilize that income towards qualifying.
Okay. Okay. Fair enough.
Now, okay, another one thing that you could look at, I guess, is if it was like a duplex or a triplex. So you can't like have border income where you're renting out a room, but if it
Okay.
was a multi-family, unit, then yes, you could use that.
So, like an ADU, for example.
The ADU, I don't believe you'd be able to because it would have to be zoned for like, a duplex or a
Oh,
triplex.
multifamily or
Yeah,
something. I
exactly.
I got you. Okay, that makes sense. Um, yeah, I just remember, buying my first home and I was petrified. I, saved up the money to do it. And I was like, man, I don't know how this is going to get done. And then, the lender at that time kind of explained to me, and he did the rent versus own scenario on me. And back then, the tax consequences were different. And I'm not licensed, nor are you, in taxes and the tax benefits. But in 2000, I believe it was 15, during the first Trump administration, he gave a $15,000 deduction to everyone kind of off the top. And so my understanding is that for first time home buyers that aren't going to accrue $15,000 worth of interest payments, or not that much more than that, that it's kind of a wash as far as taxes are. It used to be different. It used to be you could actually take more deductions on your W-9 or whatever it is. And, your monthly income could be the same after that. But that's changed a little, I think. But again, you know, you spoke to the fact that when you buy a home, if you look at 5, 10 years down the road, there's just no comparison. That's how people build wealth in our country. Yeah.
Absolutely. Well, and when you're comparing the payments, obviously, it is important to make sure you can afford the payment. If
Yeah.
it's where you can't afford it, that's one thing. But if it's a matter of the payment's just going to be a little bit more than what you're currently paying renting, you do have to remember, first off, that's a principal and interest payment. So even though it starts off with a little bit being principal and then over time more is going towards principal, just because you're paying down that balance, you do still have a portion of that payment going towards principal, which is kind of like a little bit forced, a forced savings account. And then, yeah, obviously, if you, and you can use ChatGPT to even run these scenarios for you and
Yeah.
say, hey, what would be the difference if I rented at 2,000 a month versus if I had a mortgage at 2,400, assuming, normal, appreciation rates, and it'll build you out the chart and you'll see. I mean, rent doesn't get you anywhere. That's what's the saying? That's 100% interest. So, even as yeah, interest rates go up, rent's still, it's not helping you out
Yeah,
financially.
and rents have gone up incredibly. I remember back in 2014, 15, 16, the average rent was about anywhere from 12 to $1,600. And now, from what I see just online and talking with other, people who manage properties, it's hard to find something for under 1,900, 2,000. And, people are going up to $2,500 a month for, fairly simple three-bedroom homes.
Yeah, no, it's gotten
And
expensive for
that's a
sure.
lot of difference. I've seen that in two different markets because I used to be a realtor in the San Diego market, and within 3 years, the price the of a rental would you know, just go astronomically higher than what your mortgage would be if you had bought that, same year. So I know it's different for every person and stuff. Talk to me about, being able to afford the monthly payment. What I've seen from the realtor side is sometimes I have to do kind of a reality check with buyers because they might be renting a home that's on a third of an acre and it's got a chicken coop and a dog run and it's got a greenhouse and a garden and it's got all these things that they really want their top priority on their list, yet they can't afford that. It just doesn't fit in the budget. So what I've found is, a lot of times people have to reevaluate what's really important to them and look at that first home, especially as a stepping stone. What are
Yeah.
your thoughts?
Well, I would say, one thing, don't necessarily utilize what you're qualified for as this is how much I should go out and spend. Now, at times, yes, there could be a lot of situations. You just got a promotion and you're on a trajectory of getting a few more raises over the next few years. There's a lot of reasons of maybe why you're trying to afford this house and it makes sense. But I'm also saying just because we tell you you qualify for this, you still have to look at your budget, look at your lifestyle and determine, does this payment make sense? So that's the biggest takeaway I'd say is, don't utilize the lender to necessarily tell you exactly what you can afford. That's a decision you should make. And here's the thing with owning the real estate is, again, we know that over time it's, time in the market is going to make you the winner. The thing you want to make sure you avoid is a situation where you can't afford the house, so now you have to get rid of it, and you haven't been in the house very long, it's not a great market, now you're in this. So that's where it is important to make sure that you're comfortable with the payments, you feel like you're in a good situation, your employment is stable enough. And that's why we do look at a 2-year history. I know, sometimes it's frustrating. Somebody just got a great new job and they've only been on the job for 3 months and they want to go buy the house. And, we'll figure out a lot of times how to make that happen, because that 2 years doesn't necessarily have to be even the last 2 years. There can be gaps, there can be explanations. But at the same time, sometimes it's also a matter of, yeah, you probably should wait, so you have about 12 months stable to know that, life's stable, you're ready to make this next step, because it is an important thing to make sure that, you're ready for that financial responsibility. Because again, time in market always wins. As long as you're set up for that, I think you're set up for success.
Yeah, that totally makes sense. I want to switch gears a little bit and talk about timing on the market. Now, timing on the market is going to be in two different parts here, and we're going to wrap this up pretty soon. But from a real estate, from a realtor's perspective, people are always trying to time the market. I feel like houses are ridiculously high right now. they're going to go down. They also do it from the mortgage side where, rates are really high. I hear they're coming down. I just heard Trump on TV saying that they're going to do something about this. There's going to be a new Fed chairman, yaddy, yaddy, yaddy. I can't tell you how many times in 2016 I had someone say that to me. And then 2017, they said the same thing, 18, 19. By the time you get 4 or 5 years under your belt, it's like, they can't even afford to be in the market anymore, but they could have, when they were there. But talk to me about interest rate timing. Let's say that everyone's anticipating interest rates going down. Would you wait?
Well, here's where the challenge there is. You have opposing forces, and what I mean there is, obviously, like ideally, yes, we would wait until interest rates were the lowest and home prices were the lowest, and then we'd go ahead and buy the house right at that moment.
Does that ever happen?
Yeah, but that's exactly that doesn't exist because that's those opposing forces that I'm talking about. Obviously, as rates come down, that's intentional. That's to bring people back to the market. So the opposing force as rates come down is now you have more competition. So
Yep.
the one thing I would definitely say is, hey, especially if we're talking first time home buyers, if we're talking you're buying your primary residence, the only thing I would wait for is if you're not ready and can't buy the house or can't yet afford the payment. Because again, it's about time in the market. Now, if you're talking, I've got 8 rentals and I'm trying to decide, do I expand my real estate portfolio or do I maybe look at liquidating? Then there's some different kind of factors to consider. But that's the challenge is there is no perfect, there is no perfect time to buy. If you wait for low rates, you're going to have other issues you're dealing with.
Yeah.
If you jump in when rates are high, you don't have as much competition, but obviously that's a damper on affordability. Now, I will also throw this out. I mean, a lot of people have heard this. It's kind of cliche, but it's, marry the house, date the rate. Because the other thing with it is realize if you buy a house and we're at a 6.5% interest rate, the good thing there is as much as we would like a lower interest rate, if it's a fixed rate, it's also not going any higher. So we've protected basically your level of what your home expense is going to be. Ideally, and I can't guarantee when rates will be lower, but you look and we know these things go in cycles. Ideally, rates go lower and we get the opportunity to even lower that payment for you because we can take advantage of a lower rate. So that's
Yeah.
where I wouldn't scare away from buying, in a market where rates are high, but at the same time, like obviously if rates are low, that creates a good environment for buying a house. So I know that sounds very, industry answerative. It's always a good time to buy, but especially for somebody, again, if you're talking your primary residence, it's all about time in the market. It's that whole cliche, when's the best time to plant a tree, 10 years ago. So, we don't have a time machine, so do it now.
Well, listen, Rich, I want to just thank you for your time today. And anyone that needs to get a hold of you, what's your number again?
Yeah, absolutely. It's been a pleasure. And yeah, you can give me a call anytime, 435-669-8003.
And again, I can be contacted 435-703-4041. Well, thanks so much, Rich. You have a great afternoon and thanks for participation in this. And for the
Absolutely.
questions
Have a
we
good one.
didn't get to, if you continue to text them to me, I will get them answered for you. Thanks so much.
Thanks.